weekly market review. I'm your host, Todd Clark. This week, a new jobless report came out, and so we're going to turn some time over to two of our portfolio managers, Case and Grant, as they discuss the jobless report and how it may impact CLS portfolios. For more on that, we'll turn to Case.
Hey, thanks, Todd. So, Grant, first big news. We're a little furry right here.
Yeah.
Join us in the studio.
Yeah, looking a little rough. CLS and the Greater North Star have been charitable organizations, and
Right.
their employees are as well. So, you see a lot of beards around with people donating to various causes and growing
Absolutely.
them out in the month of November.
Well, we're trying our best. So, to get back into it, though, big news last week was non-farm payrolls. Big jump in what everybody expected. What'd you see there?
Yeah, number was much higher than even the top economists' forecast expected.
Right.
Unemployment rate hit 5%, obviously the lowest we've seen in a long time. Quarterly or hourly earnings exceeded expectations as well, which is a big part of that number. Really what market participants are thinking is this is given the Fed the green light to go
Right.
and raise rates in December. And so the probabilities shot up dramatically after Friday's number. One thing to watch out for, and that we would say would lead the Fed to be slower in raising rates as they start the process, is the U6 measure of unemployment, which measures both unemployed and then underemployed people as well as discouraged workers. Still has not really recovered to the same level that
Right.
the standard measure has.
Very good point. Moving forward, quality has been one of our biggest themes for the last couple years. Is that still going well? What do we look at going forward there?
Yeah, it's going great. Kind of as we alluded to in the quarterly market review, quality companies are doing really well this year, especially against low quality companies. One thing that we continue to hold that overweight is going forward. The expectations for quality companies is also high during Fed rate hike cycles, which, as I mentioned, seems to be a strong possibility come December. Quality companies outperform generally by a couple percent over the market as a whole during those periods as well.
Great. Yeah, that's good news. One area shifting focus that hasn't done as well for CLS and other investors are people that hold commodities, people that hold real assets. Should people that hold those be abandoning those? What's your outlook there?
No, definitely not. I mean, we've written about that several times before, that obviously it's been a rough ride. It's a volatile asset class to begin with, and it's been fairly volatile lately too. But if in today's market environment, value is fairly scarce, and commodity-oriented sectors are very undervalued. We like those going forward. If you look at the real or the inflation-adjusted price of a broad commodity index, it's at a level that expected returns in the future are much higher than that of other asset classes even. And they also tend to do well during Fed rate hike cycles.
All right, good stuff. Thanks, Grant. And make sure to check out the weekly written commentary, the full commentary from Grant on clsinvest.com. And thanks for joining us.